Hey, Dan Passarelli here. Well, today we had an outside day in the market, meaning that today's high was higher than yesterday's high and today's low was lower than yesterday's low, but it still was not that big of a move at all. We just made back a tiny bit of what the market gave up yesterday. S&P 500 up 0.3% with SPY closing at 677.58. Now, the real story here today, I think, is something that I posted in the MTM community chat room earlier this morning. Posted that there for our students, especially those who follow John Kamisik's group coaching class, which is an excellent class, every morning. Now, the thing that I posted in there was actually something Kathleen sent me. She was reading the news while I was drinking my coffee. And it was a pretty interesting little piece here on Michael Burry. Now, Michael Burry, if you're not familiar with him, he was one of the people that the movie The Big Short was based on. He runs Scion Investments, I believe that's the name of the company. And he looks for companies that are overpriced and shorts them or buys puts or whatever, takes bearish positions. It's at least one of the things he does. So he fired a shot across the bow by announcing that he bought $1 billion worth of puts in 2 companies. And I think these companies just might surprise you. One of those companies is Nvidia. Now, Nvidia has been everybody's darling, right? They make the chips that build the backbone of artificial intelligence. Now, that's pretty solid business. And they run a pretty solid business and they print money. They're the first company to reach a $5 trillion market cap. I think I got that number correct. Big business. They sell a lot of chips. So they should be a great investment, right? Well, it depends. All great investments are, I'm the investor. I give this amount of money and I get back this amount of money. I give this and I get back more than this. How do we figure that out? Well, I mean, as a stock investor, we watch the stock price go up. That's what we want to see happen, and or get dividends. Now, Nvidia is not really a dividend type company, but we can measure what a stock should be worth a couple of different ways. And I'm going to make this oversimplified here for a second. But not terribly oversimplified. When we buy shares of a company, we're buying ownership into that company, and we get to participate in what the company earns, literally. And so if we look at how much a company has earned, say like in the last year, we can get a feel for what they might earn next year and the year after and the year after. And we would be willing to pay some sort of multiple over what they earned this year if we think that company's earnings are going to grow in future years. So we look at what's called the price to earnings ratio, PE ratio. And in Nvidia, the PE ratio as of today is 55. That means anyone who buys Nvidia stock today is paying 55 times the last year's earnings. So if you were going to buy like some other investment, like the guy down the street is selling a dry cleaners and he says, well, I'll sell this company to you if you pay me 55 times what I made last year. Which would mean if business stayed the same going forward, it would take you 55 years to break even on that deal. Now, people buy Nvidia because they think that earnings are going to grow. They would have to grow pretty massively faster and bigger in order to catch up to that 55 times earnings. Now, they sell a lot of chips. They're a $5 trillion company, roughly. They just broke that record a couple of days ago. But 55 times earnings, is it possible for them to catch up to that? It's not that the company doesn't have an incredible product that everybody wants. Is this stock, the question is this stock price worth it to buy into that, or is it just priced out? Now, the other company that Michael Burry bought puts on, again, a total of $1 billion between the two companies, is Palantir. Now, Palantir was created by some of the most brilliant minds in tech, and they have a pretty incredible product. What they do is they have gathered data and they created AI, and they sell solutions to government and the private sector. Now, 55% of their business is selling solutions to the government. And these are incredibly brilliant type solutions based on massive amounts of data that is crunched by AI in a way that probably nobody else on the planet can. Pretty incredible stuff. But 55% of their business is the government. And we know what the problem is there. If the government decides to stop writing them checks, which could happen because our current administration changes policy, or it could happen in 3 years if there's a change of administration. So that's a lot of eggs in a single basket. Now, 45% they sell to corporations, and they've been growing that business for that reason. They've got a really good, solid business. They know what they're doing. They provide a valuable service. How much over earnings would a logical investor pay for a pretty great business like this? Would 50 times over earnings be worth it for a business like this? How about 100 times? How about Tryon for size 426 times earnings? That's where it's trading as of today. If Palantir's earnings stayed the same, it would take you 426 years to get your money back, if you think about it just like brick and mortar investing. That's insane. This company would have to grow massively and extremely quickly, and they're not going to grow extremely quickly, because even though they don't have factories, it's all service-based, really. Computers provides most of that service, but service-based. They're selling ideas. They don't have to build factories. They don't have a lot of CapEx in that regard, but they do have to keep up with the Joneses because AI changes so quickly that they have to keep investing hundreds of millions of dollars every year into keeping up with the latest and greatest AI so that they stay on top. They have big costs. They're not going to grow fast. They could grow a lot, but it becomes a very difficult case to make to pay 426 times what they earned last year. And so, personally, I'm with Burry on this one. On Palantir, anyway. Nvidia, could they be worth it at 55 times earnings? Yeah. But at 426 times earnings, it seems to me impossible for any company to grow that big, that fast at any time in the future, even if their stock price never rose a penny from here. I hope that helps. This is Dan Pasquarelli. Trade smart.